What crypto season may be upon us this quarter and into the summer months? A crypto winter? An alt season? What events should we all be on the lookout for in the short term as crypto investors? Hello, I'm Crypto Casey and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. If you're interested in seeing more content like weekly curated news and how it affects the crypto markets, please let me know by liking this video, subscribing to my channel, and clicking the bell notification to stay up to date on all of the latest videos. This video is sponsored by NordVPN, my personal favorite virtual private network service provider I've been using well before I even started this channel. Using a VPN is an easy, effective, and important way we can further protect our investments and privacy in the crypto space. NordVPN is offering us their 2-year plan at a 70% discount with 1 month completely free so you can try it out. So make sure to scroll down to the description area below to check it out, or feel free to use the QR code on the screen to redeem their offer. There is rampant scamming activity happening in the finance and crypto space right now, with people and bots creating duplicate social media accounts of influencers and educators in the space like myself. The only official accounts I have are listed in the description area of these videos. Anything not listed in the description area of these videos is 100% a scammer. So only use the links in the description area to access my only official profiles. And please make sure to report any other scam profiles that try to follow you, message you, because their only goal is to steal your money and your crypto. So stay vigilant in these crazy times, crypto fam. Awesome, let's hit Crypto This Week. This week, everybody's favorite rogue serial entrepreneur, the infamous Elon Musk, made a bid to acquire what he refers to as the town square of the world, social media platform, Twitter. And most of Twitter's users and shareholders seem to be in favor of the privatization of the platform with Musk at the helm. But what about the board? Twitter board adopts poison pill after Musk's $43 billion bid to buy company. Twitter adopted a limited duration shareholder rights plan, often called a poison pill, a day after billionaire Elon Musk offered to buy the company for $43 billion, the company announced Friday. Such a move is a common way to fend off a potential hostile takeover by diluting the stake of the entity eyeing the takeover. The board voted unanimously to adopt the plan. Interesting. And the idea of a hostile takeover has hostilely taken over conversation on the internet. Some with the stance as seen in this tweet that we should have a lot more hostile takeovers via weaker legal obstacles to doing so. They are a powerful underused way to discipline management. While others think otherwise, like what Ethereum founder Vitalik Buterin relays in this tweet, don't oppose Elon running Twitter, at least compared to status quo, but I do disagree with more generalized enthusiasm for wealthy people and organizations hostile takeovering social media firms. That could easily go very wrong. For example, imagine an ethically challenged foreign government doing it. So what implications does a successful hostile takeover of Twitter by Musk mean for crypto? Well, at the very least, this creates a bullish narrative for Dogecoin, the cryptocurrency Musk has frequently tweeted about in the past and openly praised in the media over the past few years. In fact, this week, Shiba Inu and Dogecoin now supported by AMC's mobile app, allowing users to purchase tickets using these two largest meme coins. Nice. However, the Twitter Musk situation could also potentially spark more widespread awareness of and interest in DAOs, or decentralized autonomous organizations, a type of entity that will likely reign supreme in our Web3 future. And if you're interested in learning more about DAOs and how they could shape our future societies, both online and offline, make sure to subscribe to my channel and click the bell notification to stay up to date on all of the latest educational content in the pipeline. Cool. If you've been tuning into the past few episodes, you know that the US dollar has been becoming less attractive to other countries as the world's reserve currency. This week, another nail is drilled into USD's coffin. Treasury Secretary Yellen, US prepared to impose sanctions on China if Taiwan invasion occurs. In response to Congressman Patrick McHenry's questioning on April 6th, Yellen confirmed the administration's ability and resolve to sanction China if aggression against Taiwan ever came to light. She backed her position by stating, "I believe we've shown we can impose significant pain on aggressive countries, as evidenced by sanctions against Russia." And Yellen ain't wrong. They have indeed shown that the US has unilateral power to impose significant pain on any country they decide to target and deem aggressive. And as a result, countries are opting out of US dollar-based deals, like India and Russia agreeing to transact oil, rupee to ruble, and same with China, yuan to ruble. China already has an established, robust digital currency. They hold a lot of US debt, and at the end of the day, they've got a lot of power and are fraternizing with countries that aren't exactly fans of the US. Not that many are actually fans of the US in the first place. And the US flexing its power and control over the global financial system will probably fracture enough to allow cryptocurrencies to creep in and thrive. To what level or degree? Definitely too soon to tell. A lot of the US's ability to stay the financial superpower of the world hinges on their ability to create a clear and favorable regulatory environment that fosters growth and innovation in the blockchain technology and cryptocurrency industry. So what's the current status? US is behind on crypto regulation and it discourages investment, says Ripple CEO. Here's what you should know. The United States is behind the 8 ball compared to other leading global economies in providing clarity about how it will regulate digital assets, according to Ripple CEO Brad Garlinghouse. And that's a problem for investors, he says. Without regulatory clarity, you're navigating with uncertainty. It discourages investment, and it certainly discourages investment here in the United States, Garlinghouse said Thursday at an Axios event on crypto regulation. And Garlinghouse ain't wrong. There is a ton of institutional money on the sidelines awaiting a green light from regulators on cryptocurrency investing. And while we are in the Ripple wheelhouse, this week, Ripple versus SEC. New class action lawsuit filed on behalf of XRPL users against former SEC officials. Cool. Ripple is still giving the SEC hell, and it's looking like they are headed towards a favorable outcome later this year. In the meantime, some more brave institutions that are testing the waters amid continued regulatory uncertainty. Circle plans to apply for a U.S. bank charter soon, lauds the OCC for cooperation. If approved, Circle will join the other 3 federally chartered crypto banks in the U.S. Anchorage Digital, Paxos Trust Company, and Protego Trust N.A. have all received preliminary approval. Sweet. And another big player in the traditional financial realm, Fidelity launches crypto metaverse ETFs. With this launch, Fidelity will offer 51 ETFs with more than $33 billion in assets under management. The new funds will be available on or around April 21st for individual investors and financial advisors to purchase commission-free through Fidelity's online brokerage platforms. Nice. So ETFs give people price exposure to assets without them actually owning the underlying assets, which is a double-edged sword for cryptocurrencies. One, it's great because it allows more money into the space and more adoption of the new digital asset class overall. But 2, it's not that great because it creates more artificial supply in the form of paper debt of an asset that is meeting actual real demand for the asset. This artificial supply of the asset, meeting real demand, causes price suppression of the asset, meaning we aren't really seeing the true price of Bitcoin. And if you'd like to learn more about how Wall Street is suppressing the price of Bitcoin by applying traditional debt-based practices to the equity-based Bitcoin, you can check out my video guide breaking it all down by clicking on the link above. Long story short, since Bitcoin is an equity-based asset and not a debt-based asset, if there is not enough available supply on the market to meet real demand in the event of a short squeeze, when institutions are trying to buy Bitcoin to cover loss positions and there isn't enough Bitcoin available for them to buy, we could see the price of Bitcoin skyrocket, which would be good, and we could also see global systemically important banks collapse, which would not be good. Either way, this past week, a ton of Bitcoin has been moving off of exchanges. This could indicate big moves for Bitcoin could be underway in a relatively short period of time. I'm not saying for certain, as no one, myself included, can predict what the price of Bitcoin will be in the short term. However, if there is not enough Bitcoin on exchanges to fulfill demand, exchanges will absolutely start freezing withdrawals and halt trading activity. 2 key pieces of not financial advice, but advice on preparing for a potential short squeeze or gamma squeeze of Bitcoin is to 1, have as many different accounts with different exchanges, so in the event that one freezes and you're trying to make some moves, you have as many other options as possible to manage your crypto. If you scroll down to the description area below, you can access a list of my recommended crypto exchanges along with some sign-up bonuses you can redeem. And 2, if you're holding for the long term and your crypto is on exchanges, I highly recommend considering moving it off and into cold storage hardware wallets for safekeeping. I just did an overview of Ledger's newest affordable hardware wallet device, the Ledger Nano S Plus, which you can check out by clicking on the link above. Either way, scroll down to the description area below to access the correct and official sites of my recommended hardware wallets. BC Vault is my personal favorite. Another more affordable option are the Ledger devices, so scroll down to check them out, or feel free to use the QR codes displayed on the screen. Amazing! So what is the market looking like it's going to do over the next few months? Well, this week, the latest and most historically bad inflation report came out. How historically bad is it really? Tweets the savage Finn Henrik. This bad. This is a graph of the flexible price CPI less food and energy going absolutely parabolic over the year compared to an otherwise steady downward trend since the mid-70s. And what's tragically funny is that shows us where the Fed is getting the 8.5% March inflation number from. However, if you include food and energy, it's 25%. But hey, they're selling you 8.5%. Are you buying? Or is that a bit too rich for your liking? Crazy. All right, let's quickly run through the vast and varied predictions the media has for the market movements in the short term. Stocks tanked in the first quarter, and new research shows there should be a reversal by the end of June. This was based on a new study that claims one effect of changes to the capital market structure is that bad quarters are more likely than not followed by good quarters. Very data, much scientific. Another source says Bitcoin could plunge to 30,000 by June, and Ether could flop too, as they follow tech stocks down, crypto platform co-founder says. Expectations for a series of interest rate increases by the Federal Reserve in coming months have weighed on crypto and tech stocks recently, with the NASDAQ 100 index losing 3.6% last week and Bitcoin briefly dipping below $42,000 on Monday. The Fed may need to hike interest rates above 4%, Goldman Sachs Group Inc. chief economist Jan Hatzius said Friday. So I think the main question that is on all of our minds is, will we see another crypto winter or altcoin season? As institutional investment continues to pour into the industry, there's hope it might bring greater stability and predictability to crypto markets. Markets work in mysterious ways. There are infinite factors, data, and information manifested in a single price and its movement. Investors, from the professional analyst to your coworkers scrolling Twitter for investment ideas, strive to recognize certain patterns in asset prices to predict where prices are headed. Seasonality offers a glimmer of hope to investors trying to outsmart the market. So hey, my random wild guess at the moment is if we zoom out, in 2018 we hit all-time highs followed by a major pullback. The next time we reached those same all-time high levels was here in September of 2020. From that point until the May peak last year in 2021, it's just been choppy sideways movement, but in a slightly upward trajectory. It may happen next month, or maybe we have another boring summer and it happens near the end of Q2 or beginning of Q3. Either way, again, my random wild guess is that we are in a bull market, albeit a mild one, that is poised for an upward breakout. But hey, I honestly don't know. We could crash back down to 30K or 20K throughout this year. What is certain though is that we are all going to find out soon enough in the coming months. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video, subscribe to my channel, and click the bell notification to stay up to date on all of the latest videos. So what is your position on Elon Musk's hostile takeover attempt of Twitter? Do you think the US is going to implement clear and favorable crypto regulation soon? What is your Bitcoin price prediction for the short term? Let me know in the comments below. Be safe out there.